Welcome to Momentum Monday, this April 2nd, 2023. Howard, how do you feel about the strong close of the first quarter, at least for tech
I'm happy.
stocks?
Listen, I'm kind of, risk off, since last year, so not very long, but I'm not selling into this. I do think it's, it was a great quarter for the NDX, but, and it's just people have piled into cash as if there was a crash. And from the headlines, it was a crash, but it really was contained to the KRE or the regional banks.
Yeah, the regionals, the financials in general,
Yeah.
KB and
So there
XLF.
was a crash. It's really fascinating.
In some sectors, yes.
Well, financials are, look at Schwab, like there's some fear, right? Like I own a little now, I bought some, but like go back on a weekly and a monthly. I mean, you've wiped out 6 years of gains again. So you're back to what are we, 2016, 17, 2017 prices. These aren't growth companies, so it's like, but man, what a long, strange road to break even for a lot of stocks over a long period of time.
Yeah.
So, and then Europe continues to outperform the United States. So, I mean, if your timing was good, buying in November, December was great. But for me as a trend follower, there's very little to get excited about. I will say CBOE, it's interesting. CBOE broke out to all-time highs. And I'm like, interesting to me because, pretty good volume. It's an American leader in markets. And no one follows the stock, right? Like I went to stock, which was like 1,600 followers, right? Whereas everybody's talking about NFTs and AI. There are going to be some great trends from AI as AI becomes cheaper. And it's not just semiconductors. It's just going to be, it's a growth feature for the world, AI. But it's not clear cut yet. It's only been 4 months since OpenAI came out in ChatGPT 3. So it's too early to say anything, but you're starting to see some signs of life and growth because AI is more real than crypto. Crypto is very much a financial and scammy in many ways product and very little use cases for all the money. So it kind of explains why tech went down, right? Bitcoin has not lived up. Blockchain has not lived up to the hype. And AI may step in here and replace it. So that's what I see. If you caught, the panic of last year, you've done well in the first quarter. The question is, do high interest rates revert this right back to the mean? I don't know. What do you think? But CBOE is a nice breakout. CBOE is a nice breakout.
Yeah, definitely. I mean, it's a kind of slow mover. That's why people don't follow it that intensely. But interest rates are high compared to the past, let's say, a few years. But in a longer horizon, they're kind of normal.
No. If we stayed at 4 to 6% interest rates, people should be thrilled. But remember, Ivan, you're doing that from home prices that are extraordinarily high. So 6% 30 years ago is different than 6% today.
Yeah, the affordability of houses definitely at all-time low, basically.
Like you're a successful guy, you don't own a home because it's expensive. Like the cost.
Yeah, I don't own a home in San Diego. It still doesn't make sense financially to me. It's much.
So which I mean, the 6% interest really slows down the economy because American homes have been a huge driving force of the economy of furnishing your home, building the home, upkeeping your home, insurance, maintenance, so a rental economy, the world won't come to an end in the United States, but it's a huge transition to a different type of financial growth. And I don't think the world has grokked that yet. So interest rate at 5%, like you said, shouldn't affect stock prices if we stay here for much longer because, people get used to what growth looks like in a 5 to 6% world.
Yeah, it shouldn't affect most of them, especially profitable companies.
Yeah.
Obviously, from valuation perspective, one can make the argument that many tech stocks are still very expensive. So it's there are plenty of factors, to be a bear and to be a bull. From price action perspective, it's better to be a bull right now since we're in an uptrend on various.
We're back above the 200-day moving average. So you can start looking at good setups, and you're starting to see them. We talked about Axon, Taser. I mean, that just led before the markets turned. We talked about interactive brokers, and as bad as the financials have done, it's held on. It's held on compared to Schwab. So you can see relative strength. Axon, interactive brokers, CBOE. There's some leadership out there in major categories.
Yeah, right? The brokerages that are paying, money on your cash definitely are attracting flows right now, which, right, like Robinhood, interactive brokers, because many of them still don't pay nothing on your cash. So.
But again, go back to Schwab, and I'm like, CEO came on CNBC. I saw a clip because I bought some of the stock here, and I'm like, he was like adamant, saying like, we're fine, and I don't know if I should believe him or not. I'm just saying and the stock won't bounce, right? So there is a lot of skepticism out there, which may not be good for Schwab, may be good for the market, or there's another shoe to drop, and we just don't know yet. That's why I'm not like that. Listen, better to have wall of worry. Stocks will climb a wall of worry than just what we had in 2020, 2021, which is just pin your ears back and buy anything. So stock investors that do a good job here or stay invested in the right things are going to do well, because we have a wall of worry to climb now, right? We've had, tech crash. We now have a financial crash. We've got this rolling crash going on. Commodities have basically crashed.
Yeah. They're talking about issues with commercial real estate as well.
Yeah, the REITs are crashing, commercial, so it's not like pleasant out there. But Nasdaq's up 17%, so hedge funds are going to be freaked out, and they're underperforming. I mean, I'm glad I don't have to outperform anybody, and that's the luxury of having some capital in this market, is you're not competing. If you're competing, this is just such a tough environment, because this whole year you're now panicked because you're behind the averages. Anyways, what are you seeing anything like that's interesting?
I mean, there've been quite a few strong trends in tech. In terms of there are a couple of foreign stocks that I've been following, and then which longer term trends I like. One is Mercado Libre, broke out again last week after
so it's doubled off the lows. Damn,
a short base.
I remember.
And the other one is SE, which they just reported their first profitable quarter a few weeks ago. Had a big earnings breakout, and now are kind of following through. Obviously, still far from their all-time highs, but they're slowly building the right side
back above the 200-day, and you're starting to get some.
So these are the couple of foreign stocks that I like. Obviously, there is still a lot of strength in semiconductor, since SMH was up like almost 30% in Q1, which is pretty significant outperformance.
The advanced decline line, and I was looking through the SMH, and the advanced decline line is meaning that it's being carried by a few stocks.
I mean, obviously NVIDIA, AMD, definitely the big leaders.
So be careful. You got to own the right semiconductors. This is not, they're being associated with AI. And so it's not just, if we're going to go into a slowdown and the China-Taiwan thing is still going to be raging, you got to be careful, because you got to be careful which semis you own and which category. And I'm not expert on that, but on semiconductor, JC and I have been chatting about ON. I think ONN maybe, or ON. Yeah. So there are semiconductors.
Yeah, there are quite a few of them that are really looking.
It's interesting. The Arizona market, you got First Solar headquarters here. You've got Axon headquarters here. First Solar just drove by their headquarters, all-time highs. Axon, all-time highs. And then on Semiconductor, all-time highs. So you got this is a huge diversified economy here. I was telling people, like, from our event, that Phoenix is probably maybe the strongest city in America right now in terms of just growth. Everybody's moved here, tax friendly, weather friendly, other than the 4 months of the summer, which again, people will put up with for great living. House prices aren't crazy, although rising fast. And, the government here is focused on the water problem. So Phoenix, again, it was the ugliest recovery in Phoenix because of the real estate crisis, but now one of the strongest diversified economies in the country. So seeing it firsthand here in Phoenix, versus, I went to Chicago and it was just an empty disaster. And living in Phoenix through COVID, I didn't really recognize, I didn't recognize the growth that was at hand, and it's just booming here. Hotels are booked, prices are up, even despite a crappy winter of weather. So there are pockets. But I was talking to at my event, I was talking to Meritage, founder, MTH. He came and spoke, and we go look at, and he was talking about how they've been focused on their balance sheet this time around because they got killed for $800 million in 2008. And so again, they're not leveraged. So you're not going to get that. You get a breakout here, it's not going to be, they're not leveraged, so you won't get the crazy run up, but they're much stronger balance sheets because of the recency bias of 2008 to the memory muscle. So they're not crashing even though interest rates are high, right? Because they just don't have a lot of inventory out there. So it's really a lot of smart CEOs from 2008 combined with a lot of dumb CEOs, which we saw in the banking with the duration trade. I had the Axos, I've talked about that a while. I've had the Axos CEO at my event as well, Greg Garaband's AX, and they weren't in that trade. But the stock's still getting, hammered, but they weren't in the duration trade, right? So it's just a tough market, but there are signs, and we've been talking about them for a few months. And I'm going to stay long Goog. I still like Google. AI is a threat, but at the same time, I think you got to buy these great companies in duress, not at all-time highs, like the bigger value. I think Microsoft's probably in the best position because they still own the corporate client, and they have all this cash, and they have all this power at the enterprise. But
Google's been probably weak because people are doing like a pair trade, long Microsoft, short Google.
And then Apple just looks fantastic. No AI position yet, but everybody's got their phone, and if they come up with an AI strategy,
Siri in a way is an AI, so I'm sure they've been.
Yeah, I never use Siri, so right now that's probably why I don't use AI. But again, AI is going to make Siri.
But Apple is a big player. The other day, I saw someone on Twitter mention that he played with
because they have maps too, right? I'm still my two favorite. Even though I just hate Microsoft, but I think AI will help LinkedIn and Microsoft too. So it's like Microsoft, Apple and Google of the FANGs are they're just not going to go away quickly. And it's just the size of these companies make these boats huge to turn, and they need a tailwind. AI could be that tailwind that helps most of FANG here at least grow their valuations. We'll see. Listen, there's always a chance that rates are at the end of the cycle here, and we start seeing, a slowdown in rising rates. But I can't.
Well, the market has been pricing this in, obviously, in the first quarter. Definitely, inflation expectations are going down. This is why tech stocks have been outperforming.
Yeah.
But earlier, I wanted to tell you that someone on Twitter mentioned that they experimented with ChatGPT and the voice of Steve Jobs. So now when you ask it something, he's replying in the voice of Steve Jobs.
That's a little creepy.
Yeah, in kind of the way he would reply. So it is, but just imagine the opportunities, like in terms of voice and personalities.
The most interesting thing here is when iPhone launched, which was last great, boom in tech, people were skeptical. right? Like no one thought the App Store would work. BlackBerry was the reigning product. You know, and with AI, everybody's already on the bandwagon and it's great. And it's only 4 months in. So people are really grasping at things. It's the next, you know, now that's how the hype cycle works. I think it's super interesting because AI is becoming cheaper every second. But I think the government is a wild card here because we're so far behind and off point and with FANG and with Facebook. And now they're in that intervention mode where they hate tech. And, you know, that could be a huge, you know, headwind as AI. Yeah, I don't know if it's good or bad. Like, I don't trust, you know, for the people that the internet allows to spread rumor, as we've seen with Trump and with, you know, media, all cable media, actually, handing them an AI tool to just further, you know, fan the flames. It could be a dangerous time for AI, you know.
So Italy just bans ChatGPT. So,
and again, you go to Tuscany and I'm like, I don't need any technology. So it's not like, I mean, that's very on point for Italy, which is just goes nowhere for decades at a time. So it is on point. I don't think it proves anything yet, but it's very on point for Italy, which is like, leave us out of the tech thing and we'll just focus on agriculture and great products and food and travel, which is a strategy, you know, because they have some of the best companies there. Yeah, right. Ferrari. I mean, it doesn't matter if they need. That is amazing. Art. Yeah. So, anyways, let's end it there. There's some positive. I guess you would say some positive. Are you still mostly cash on the swing side?
I have a few positions, but yeah, mostly cash. Yeah.
Okay. So we're saying, you know, swing. You're not as, you know, you're being a little more opportunistic on the long side. It seems like there's a big change in tone. But
I mean, I have to, especially with my clients' money because I'm underperforming. So
yeah, well, it's tough when an NDX goes straight up for a quarter.
Yeah,
that's not a perfect market for you. All right, buddy. Have a great week, everybody.
All right. See you, Howard.
Cheers.